let's begin, or let's resume from yesterday by going to the Interactive Brokers platform. I realized that yesterday we had a problem because I wasn't showing you as I moved around in the platform. So you kept seeing all the time the same thing while I was explaining the trades. So we may eventually decide to do just one trade to exemplify again. But the important thing is that everyone has the paper account with Interactive Brokers so that they can later do their project using Interactive Brokers. But we're going to start with Interactive Brokers, but we have to move now to a different platform. And the reason is that because today we're going to look at 3 topics. These 3 topics is why do we need an investment platform? And why we should invest in stocks rather than any other asset category? And what should be our expectations? So these are the 3 topics that we're going to look into today. And starting with the first, I would start by talking about free platforms. You know, there are plenty of free platforms in the internet. If you make a search on the internet, you'll get probably hundreds of thousands of free platforms, but these are not really suitable for real money investing. I mean, some of them are incomplete, some of them are more oriented towards frequency trading and so on, so that probably there are not very many free platforms that can be useful, although some big aggregators like, for instance, Reuters and Bloomberg, they have free versions, which are reasonably good. They have a lot of limitations, but they could be reasonably good. But anyway, sometimes it is useful to use some of these free platforms. I'm going to show you an example of a possible platform, which is the one which you have seen yesterday. It's called TradingView. This is good for instance, to look at prices. Let's say if I want to look at the price of a stock, like you know, Rhine Metro, for instance, which is actually RHM, and it's very good at selecting all the venues where this stock is traded, and you can get the prices and a lot of information, financial news, documents, technicals, forecasts, seasons, and so on. So if you look at this, then you can choose a full chart, and here you have a full chart with a lot of indicators that you can use, and this full chart gives you delayed prices, and this can be useful if you don't want to log into your broker, and if you want just to do some analysis and you don't want to look at real-time prices. So this can be actually useful, and I will give you an example later on. So some of these platforms, like this one, as we have seen before, they have plenty of information about the company, not just the chart, but so they have a lot of information. And you can, of course, look at this information like key statistics, employees, some information about the stock and so on. So this basic information. So as I said, free platforms are not really an option for serious investors, but they can be useful, and you can actually combine them with some other platforms, professional platforms. Okay, but before I make all my comments about choosing the right platform, let's listen to our short video to see what we have to say on our short video. And now I have to find it here somewhere, but this thing keeps moving above the places where I need to be. And here we have the the video and let's listen to this short presentation. We can now start our little discussion about the choice of an investment platform. So the first thing we need to answer is why do we need a platform? I think we have already a broker's platform like we have here on the screen. Why do we need a platform? So why doing that? Of course, if it was free, like this one is free, so the platform that comes with your broker is a free platform, why should we use another platform? So there are basically two types of platforms that we need. One is a platform for administration and compliance. So if you are a big fund manager or if you are a big investor, or you invest other people's money, you need to have a proper administration platforms, but for accounting, reporting, CRM, and so on. So, but if you are an individual investor, and of course you don't need these administration platforms because you can simply use an Excel spreadsheet to keep track of your investments. So you wouldn't need that. So that's the first impression. But of course, there's a further need that you have, which is a need for information. And although we are these days inundated with too much information, the problem is that we have too much information. But nowadays there are a few AI innovations that we can use to sort of screen or shortlist the type of information that can be useful for us, because otherwise it would be lost in such a big in such a large amount of information. So if those AI platforms are free, they could be useful, but they still don't match the needs of a true professional investor, which is that a professional investor needs to have some form of intelligence. And traditional investors would get that intelligence from by hiring analysts who would look and study all the various companies and process all the information in the market, and basically would work like a kind of private advisor. Or otherwise you could hire an institutional advisor like an investment bank just to send you the stock picks that you should consider for your investments, and would rely on their expertise and on their source of information. If you go that way, then of course you have to rely on other people's know-how and their experience and their strategies and so on. In that regard, you become like a kind of a passive investor to some extent. Not really a passive investor in the sense that if you buy only stocks or if you buy only funds. And by the way, if you really need a platform for funds, then you don't need any of the platforms I'm going to mention, but you can simply select the Morningstar platform for funds, or if you want to use the Reuters Lipper platform, which is also available, I think, from LSEG. You can also use that platform, which are specialized in funds and ETFs and so on. So you don't need really a decision-making platform, because again, you are relying on other people to do your investment decisions. But if you want to be the one at the helm to make your own decisions, then you need a platform that helps you to do that. And of course, if you don't want to spend money, the obvious choice would be to use a platform like the one we have here in front of us. Because if you look down here, so this screen I'm showing you is the screen that you use for placing your orders, buy or sell orders, and the amounts that we practiced yesterday. By the way, let me change for another ticker, because the European market is closed now, and you may want to have another one that's open now. and see how it goes. But anyway, so you can see that apart from the screen where you place your orders, you also have here some suggestions like US movers, for instance. If you want to have the US movers or some favorite stocks, you could have here some favorite stocks. And you have also here live news, both market news, portfolio news, news about the specific stock, the stock we have put there, and so you have also the news. But you obviously would probably realize that this type of tools, which actually can be useful, they have one minus problem, is that they are tailored to stimulate you to do trading. In fact, probably if you follow all the news and you follow the price changes, or if you're going after the big movers, for instance, and if you go after the big movers, let's say there were big losses and so on, you can of course rank them by percentage change. See the big losers, the big winners. If you go through that, then what you have here is a very interesting tool to stimulate your action. Basically you have to decide on the spot based on the information that you receive in real time. And that's a drawback of these broker platforms, because they are tailored and designed for day traders in a sense, which can benefit from this type of information. So because they are designed for day traders, you are sort of conditioning your decisions to become a kind of short-term investors. And if you want to look at some of the not so short-term tools, they still have some tools, like here in the academy. They have a few tools that can be useful, like educational tools and so on. They can be useful. And of course, you can also have, let's go back here where we were. Okay, you can choose some of these tools here. You can go to news, have news, analysis of the market, and if you go here to the classical terminal, you have a different presentation. If you do the learning, you can put here whatever you want, and you can have even forecasts that you can use as well. You can use a forecaster to do a forecast for you. So, but again, let me tell you, these are tools for high frequency traders or day traders or people who are really very active and are keen on a strategy of high turnover. So that is not a strategy that SADIF is designed to do. So that's why we have a different approach, which is to look at the fundamentals, to look at the back without being in front of the screen that tempts us to take decisions without thinking twice to some extent. Now, so let me then go to the alternatives, which are paid platforms. And when we come to paid platforms, professional paid platforms, we have 3 or 4 big so-called research data aggregators. We have Bloomberg, we have the London School, the LSEG as well. So these are we have FactSet and some of the other research aggregators. You have Capital IQ, Standard & Poor's, and so on. So if you're going to look at those platforms, let me just show you a little bit one of them. If it's still open, it should be. It's open here. Okay. So here we have, for instance, the what's called now works workspace. This platform used to be Reuters. Actually, initially was to be Thomson, then Reuters. There has been gone through a lot of changes. It now has been acquired by the London Stock Exchange, and it's now called. It was initially called Icon. Now it's called Workspace. Okay, so this is a typical. You know, if you have Bloomberg, it will be similar to this one, except Bloomberg is a little bit more faster, and also more run by commands. You have to do. You have to learn a few commands and run those commands on Bloomberg. But basically, as you can see, you have all types of information. If you go through here, you have all sorts of data, estimates, financials, ESG, corporate governance. I mean, if you want to know how much a director makes, for instance, you have that information here. You have all the events, ownership, debt, peers, derivatives, and all the filings that the companies have submitted. So this is a kind of big library of data, and not just stocks. Mind you, because in fact most of these platforms, they have macroeconomic data. So if I click here, I can go to the to monitor macroeconomic data if I want to do that. You know, events, bill auctions, and that. I have also all sorts of. I can go to the all sorts of products, for instance, and they are easy to find. So I have all sorts of instruments that I can find. I can have all FSheets, like I want euro, for instance. I can have spot rates. I can have cross rates of the euro in relation to others. I can have futures, and so I have all sorts of information, not just stock market information. So this is what we call a big library, where you have basically you should have almost all the information that is available, and whether you choose the workspace, or if you choose Bloomberg or Capital IQ, basically it's a question of the offer. What is their coverage? And traditionally, Bloomberg is the one with the widest coverage of all types of products. But with a big drawback, in my opinion, is that some of those products are not sold. They are offered by the promoters of those products, which are not paid for those products, and so they are basically a kind of advertising. And Bloomberg doesn't make a clear difference between what is advertising and it was really impartial information and so on. But if you want, let's say, if you want a lot of information, you know, that Bloomberg is of course, has a cost associated. While Bloomberg nowadays it's about $30,000 US dollars per year. The LSE, this platform here, is about 20,000 US dollars. So it's also a question of cost. So, but of course, if you are a professional investor, mind you, with a large amount of money that justifies such an expensive platform, you should subscribe to one of these platforms. Have at least one of them. You don't need to have. Some people have all of them. Of course, if you are one of the big funds with lots of money, they will have probably all of them. But smaller funds or private individuals or family office and so on, they usually have just one platform. But it is suggest that you have one. Now, if you don't have that money, or at least, or you don't want to spend that money with a big platform, then the platforms which are tailored for a specific market, like SADIF, which is tailored for the stock market, might be a cost-efficient solution. So let me now argue a little bit the case for the SADIF platform by opening it here. Okay, where is it? Okay. Okay. Actually, okay. SADIF platform, you can see if you come here to the home page, is our platform, the one we're going to use in our course, and it includes all our proprietary tools that we develop ourselves, including, you see here, our own currency exchange rate, which we call FEI, which we also have here in real time. And it has its structure along these lines. First, we have a planner section, a market section, a strategy section, research, watch lists, manager, and evaluation. So basically, these are it's structured this way. And the best way to begin with this platform, or to understand the nature of this platform and why we think it is to some extent unique, this type of platform, it's because it was designed with a view of allowing the investor to outperform the market. So we have been working, as I said to you in the introduction, we have been working the last 20 years to develop a methodology that can allow investors with just a basic understanding of the stock market to beat the market with a very high probability. And that's why, we think that a course like a program like this one to get a SADIF certification, in our view, is enough to allow investors to beat the market with a very high probability. Not 100%, of course, nobody can claim 100% confidence, but we believe that our platform is quite unique in that. So in that regard, so it's not designed to give all the information that is available. And that's why I think if you use the SADIF platform, sometimes you need to go to either to some of these free platforms to get extra information, or you need to subscribe, of course, one of the large aggregator platforms when you get all the detailed information. For instance, just to give a very simple example, if I want to know about the management of a company, we have a rating for that. But that rating is an indicator that we constructed based on the information that we collect from Reuters. But if I want to be more specific and know how much a guy who is in charge of a company is earning or is making, and what is his track record, or what is his CV, then I have to go back to Reuters. So I wouldn't find it in this platform. So if you are looking for all possible information, it's not the place to go. If you want to go just for the information that you need to take your decisions and to succeed in investment, so this is the information that you need. And this somehow is unique in relation to the other platforms. There are some other platforms who claim also to be platforms that are important to ease the job of investing. But if you go to the other platforms, you don't find anything like this, because this is entirely based on research, and it is and it's our proprietary research, and going from our research, our strategies, our ratings, and so on, and the kind of analytic tools that we're going to use and show you how to use in this platform. So in a sense, so this is the advantage of this platform. Is a cost-efficient way of allowing investors to pursue strategies of medium to long-term success in beating the market. As I told you, is not a strategy for day trading. So if you want to do day trading, forget about the SADIF platform. It's not for you. I mean, I must tell you that we had some people who subscribe to us and they are trading options. But that's simply because they found a way of using some of our information to help them in their decisions when to take over or not to take cover in their option strategies. So it's not, of course, there are some, specific areas where you can find some use for other strategies, short-term strategies or option strategies or whatever, but that's not the purpose of the platform. The platform is really tailored to allow people to beat the market in a period of between 3 and 10 years time. That's the kind of horizon that you have. That's why, funny enough, let me just also point you, we delivered, made a point of not including some information here. Like, for instance, we don't have delayed prices here. We only have end of the day prices. Why? Because we think that the intraday prices should be looked at in the broker's platform or in a platform like free platform like this one, like this one. But to decide investments, we think that investors should rely on a reasonably long period, not just the heat of the moment. And so deliberately, we have excluded the delayed prices from our platform. We may eventually change our mind sometime in the future, but probably not. My idea is that we should stick with this idea that investors should think twice or 3 times before they take their decisions, and don't be deciding in a rush based on some event or some price change or something like that. Okay, so this is the presentation of the 3 types of platforms. Of course, each one of you, depending on the amount of money that you invest, should consider whether a platform like SADIF is enough, or you need to also subscribe to Reuters or to Bloomberg. So that's an option for it. It depends on the circumstances of each individual investor. Okay, we need to move on now, and but before we move, because we didn't have time to do it yesterday, one convenient feature of our platform is that we can. I have actually created an account that we're going to use in our seminars here, and so this is right now still empty. But say if I want to import some of the transactions that we traded yesterday, I can simply go here and import them from a spreadsheet that I have already okay, where is it? Okay, I can simply import them here. So I have here the trades I had in this. So these are the trades that were done on this platform we have here. So some of these trades that we had on the platform here. So I can simply import them to our platform, and so I have here 10 buy orders and 3 sell orders. So I import them, and now I can create a portfolio with all of them or just a few of them. So if I want to do all of them, I just do that, and as I want to add them to, say, a portfolio called test, for instance, it creates a new portfolio, and I copy all of them, and I have here immediately the portfolio, which only includes NVIDIA because all the others had been closed. So out of these, but we have already a portfolio. So why should one import all the trades that one does in the broker account into the platform, because the reason is simple, is because we have here a few tools that allow you to manage your portfolio quite easily. We'll have a few sections later on about how to manage the portfolio using exactly this information. So you can either download everything from Interactive Brokers, or you can, of course, if you are using another platform, another broker, you can just add transactions here. For instance, you search for a company, for instance, Rheinmetall, and then you say that you want to enter a buy, a date, and so on. So you can, and you can do it one by one. It's another option. So this is, again, one of the reasons why it's important to have a platform like this one that allows you to import all your trades into a platform that you can then use to test, to measure the returns, to examine your strategy, and so on. So all the tools that we have in the platform. So that's why we need a dedicated platform for stock market investing. Okay, so had I taken too much time? We should be already dealing with the next topic in our seminar, which is why stocks and not any other instrument. Of course, we could have add some other instruments here. For instance, it's very easy, or should be easy, for us to add ETFs or other funds into our platform and somehow mimic a little bit what Morningstar does. We haven't tried to do that because that's not our target, it's not our mission, but could be easily done. But we need to, every investor needs to understand why invest in stocks and not, of course, he can invest in whatever class of assets he wants, but why should he invest in stocks? In the platform, actually give you the information you need to see what kind of assets you can monitor here. Look, for instance, here, if I want to rank them. So here I have the quarterly returns. We have the quarterly returns, and this is updated every day. So it's updated every day. We have the quarterly returns for the main asset categories. We have stocks here. These measures are all in the for US ETFs. So we have the SPY for the S&P 500. We have the DJP for commodities. We have for cash. We have for bonds. We have another for dollar and another one for real estate. You can see immediately that, as usual, and you can go back. So here you have the last 3 years. But if you want to go back, you just select here a different date, and you can go back about 12 years to get this same information if you want to look at more than 3 years. But for 3 years, and more so for a longer period, you can see that stocks usually come on the top. But you can see, if you want to compare stocks with for instance, bonds, you can also see that the volatility of stocks is much higher than that of bonds. So if you compare these quarterly rates on this line here with this one here, you see that they are completely different. So here you can see that stocks are, for that reason, the best asset class for those who want to pursue a strategy of growth rather than a strategy of cash. For instance, if you were to use just a cash strategy, you see your average return in the past three years would be quarterly. These are quarterly returns, by the way, sorry. It would be 0.8%. And bonds you would actually lose money. You had lose money in terms of the median. And while commodities, you won. The problem with commodities is, if you look, is that they are more volatile than stocks. So that's why, of course, you could get also, and on average, commodities are not as good investment as are the stocks, because they have on average a lower return, and they are much more volatile, so they change quite a lot. So it would be a deal. But if you want to take a longer period of time, let's say that I can go here and look for SPY, and I can add here SPY, for instance, which is the US ETF, and look at the chart here and select it here. And you can see that stocks traditional have a very good performance. They have periods where they are sort of moving, and are periods where they are really accelerating and growing probably too fast, like we have in the past few years, since at least 2022, where they have been going very fast. So you can also take a long view from, in this case, since 1993, I think, yeah. So you can also have a look at here if you want to check. If you want to check bonds, for instance, although I don't remember now I would have to go back to see I think it's PTR BX. Not sure. No. Okay, I don't remember now the ticker. So I'll leave it. But I have one that I remember, which TLT. Should be here. IAT. No, not here. Okay, this is the 20-year bond. Oops, let me see if it's here as well. Yeah, okay, if I want to look at the TLT, which is a 20-year bond, you see here that is it's not growing as fast as the stock, so you take a long-term view as well. Okay, so that's enough for the time being about why stocks.